I was recently asked a great question. Why progressive taxes? Right? There are plenty of people that think a flat tax by percentage would be more fair, or a flat fee type tax where everyone pays the same amount. And of course, some think taxes are just illegal. Those guys I can't help. Okay, first, let's acknowledge we actually have flat percentage taxes and flat fee taxes. Sales tax is a flat tax. Property taxes, school taxes, generally a flat tax. The 31-cent Wisconsin gas tax is a flat fee per gallon regardless of the price of gasoline. Alcohol production, same thing. So we do actually use all three forms of taxes. But I've spent the last 2 years at UWM studying economics and questioning my professors, so I can better answer questions like this. And while this pandemic has been brutal, one of the odd things to come from it was the coin shortage, which is actually a terrific representation of the movement of money in our society and why progressive taxes make sense. Okay, so if you've hit a drive-through or any place that typically uses cash, you may have seen signs asking for exact change because of the coin shortage. Now, we didn't have billions of dollars worth of coins suddenly disappear. Instead, we have a circulation problem. People aren't using coins as much. They aren't turning in a jar of coins before a trip. Because trips aren't happening, people are using credit cards more than paper money and coins, and they aren't spending money at drive-through windows nearly as much either. And so the speed of money has been reduced, which creates the effect of a shortage, even though the number of coins hasn't actually decreased, simply their use. Now, let's extrapolate that to the entire economy. So this is the change from the cup holder in my car, maybe a couple dollars worth, which gets circulated. This is my coin jar, probably 50 bucks. That's not in circulation. Now, normally I might use some coins one day, get some coins the next, and the cycle would repeat. So laundromats and burger joints could exchange all the coins in and out for paper money or ones and zeros in a bank account. And occasionally I'd exchange my jarring as well, putting more coins into circulation. And this is the way that taxation works and the benefit it provides. So the formula for our overall wealth, not assets, but wealth, the amount of money we have as a society to use, is the amount of money times the speed of money, how quickly it cycles. So you've heard the term income inequality, right? Well, the average CEO pay is almost 300 times that of the average employee. And currently, 22% of all income goes to the top 1%. So we are reaching inequality levels close to what we had right before the Great Depression. The very wealthy don't spend all their money, so much of it is being taken out of the equation, like my jar of coins. Now, normally, that's not a problem in smaller amounts. But when the circulation drops, so the speed of the economy slows, and when a lot of money is not in play, it hits both components of that equation, and it's one way a recession or depression occurs. And so that's where progressive taxes come into play, because they increase that money supply side of the equation, so the speed side has less of an impact. And here's what I mean. Ready? Let's talk flat tax fees. If I take a quarter from the jar or a quarter from the glass, both lose a quarter, but it doesn't mean nearly as much here. But over here in this glass, this quarter, it's a huge amount, even though it's the same to you and I. So things like a gas tax and fees that disproportionately hurt those with the least. Basic necessities, food. So let's say this dime to go to McDonald's. Well, that's a lot bigger impact here than here. And taking $1 out of here to spend at Bartolotta's just isn't that big of a deal. And it may not be an option out of this $2. So next, let's talk sales tax, flat tax. So okay, again, 5%, that's this dime. And out of here, it's $2.50 out of the $50. Well, that dime means a lot more than that $2.50. If this is $40,000, that means $2,000. If this is $1 million, it means $50,000. Well, $2,000 means a lot at $40,000. $50,000 doesn't have the same impact at $1 million. Same amount, but different impact. And $50,000 to this $40,000 income is insane. And so progressive tax here means, so a dime, and let's say 40% over here. Well, that's still $38,000 left out of the 40, which isn't huge, but okay. And it's still $600,000 left out of this $1 million, which is pretty good. And I get it. You're saying, Adam, that's not fair. I understand. I do. But here's the kicker. That $400,000 in taxes, that $20 from this jar, goes back into the economy. And if it hasn't slowed, then it creates more money and more spending from these guys. But they spend all their money, and that creates more wealth. And the wealthy get wealthier. And how do we know that? Well, we know that because this jar of coins has been sitting on my shelf since before the coin shortage. When there are enough coins and there was enough circulation, I could continue to fill this jar even though it was taking money out of circulation. But once this jar gets too big, or the circulation slows like it is right now, there's no more coins available for me to put into this jar. So that's why I suggest lower taxes for people making under $75,000 and progressively higher taxes for those making $400,000 and well up into the tens of millions. That's why capital gains should be taxed as income, because it's income. It's why business income should be taxed as income, because it's income. Listen, these guys spend almost all of their money. So the economic multiplier works to the benefit of everyone in society, including these guys. These guys, which removes money from the system, consequently the multiplier is less effective, especially as their jar gets bigger. Finally, for those of you who are thinking, well, why don't you just donate your money into taxes? Well, here's the answer. Adding just this jar of coins to the system wouldn't help the coin shortage, would it? Thanks again for watching. I appreciate it.